Welcome back for my daily report market analysis videos. I'm Rich, market analyst at Hantec on Tuesday the 21st of January. Looking at cable, we've just had out the UK employment data and it's been pretty sterling supportive. The wage growth held up pretty well, 3.2% on average wages, holding up at that level, which means that given the fact that we had the surprise downside move on CPI last week, real wages are actually going up in the UK. So you'd question the need for a Bank of England rate cut. I think more of a wait and see approach should theoretically be adopted by the Bank of England, and seemingly that's what the market is taking as well, because what we've seen this morning is a move back above 30 figure. It was hanging around that 30 figure mark, and then you saw the breakout this morning. Little head and shoulders reversal, you could argue. So you'd measure, well, let's do the neckline up there, 30.10 up from 29.60. That implies 30.60 as an implied upside target, which interestingly enough is a bit of a pivot line actually in the back end of last week. So that's initial resistance at that point, target and pivot line. Then 31.17 being that key reaction high from last week. But the downtrend that we've had in the past 3 weeks comes in 30.90 area today. So that is your key resistance that you need to see broken for the market to really suggest that this is a recovery that is worth backing again. Because I think at the moment that is a downtrend which is dragging the market to consistently test the 29 figure to 30 figure area of support. 29 figure was that December low, and then 29.50 was last week's low, 29.60 was yesterday's low before the rebound. And it's had a decent recovery since then. You look at these momentum indicators, pretty much to a sort of, to all of them on the brink, around that sort of 45 to 50 mark on RSI, around neutral on MACD, around that 20 mark on stochastics. So really is an important phase that the bulls need to back, because you've had a decent reaction from yesterday's low and a decent reaction this morning. Can they continue this run higher? Will be interesting to see. On an ongoing basis, I continue to expect 29 to 30 figure area to be supported, potentially in the coming weeks and months, especially if the Bank of England do not cut rates in the January meeting. So I think that is a consistent point at which we'll start to see support forming, and especially if we break that downtrend, it really does start to improve the outlook. But for now, we're still concentrating on how the market can react to this downtrend. And obviously the initial reaction to this employment data has been positive, but certainly needs to continue that with a run of positive candles now, not necessarily in the bag quite yet. Yeah. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.